Let's turn to Wall Street earnings, though. 5 of the 6 largest U.S. banks are set to report tomorrow, offering investors an important read on lending in the broader economy. Let's get to Bloomberg Intelligence senior bank analyst Herman Chan. Herman, why they got to do this to us? That's way too much. 5 on one day.
It is a lot, right? And then 2 of the earnings calls are at the same time. So we've got our hands full tomorrow for sure.
We definitely do. Do you expect it, though, to be a broadly constructive day, let's say?
I would say so. There's really high expectations. We just talked about tech expectations going forward. The bank stocks are up about over 17% in the second quarter, and analysts are estimating earnings up 20% year over year. That's really led by trading, investment banking, and then lending activity as well. So really high expectations. We'll see if they meet that bar.
If we see a disappointment, where is it going to come from, Herman?
Yeah, if there is going to be a disappointment, probably on the net interest margin side, given the fact that we have rates steady on the short-term side for the foreseeable future until potential rate hikes later in the back half of the year. And then there's a lot of loan demand. So in order to fund the loan demand, you might have higher funding costs, particularly on the deposit side. So that's something that we're looking for throughout the banks that are reporting next week.
Does credit quality largely look healthy? Because we have seen some consumer reports, I'm thinking of Pepsi last week, that did start to show some consumer stress creeping in. Do you think any of that will show up among these banks?
I think that's going to be a key question on the earnings call from the analysts, where analysts will probe if you're seeing a pullback in spending on the consumer side, given the fact that we've seen higher energy costs. And what does that mean for consumers that are paying back their credit cards, paying back their mortgages? How is credit quality holding up? And are there any early indicators in terms of delinquencies and the like that really point to a deterioration in the economy?
What will we hear from the regionals that'll differ from the big bulge bracket banks?
That's right. So the regionals, a lot of the same factors that the big banks are seeing are also happening on the regionals. There's a really strong resurgence in lending, particularly in commercial lending. Your bread and butter small businesses, small and then medium-sized corporations are really driving growth, and they're more comfortable with the backdrop where last year there was concerns about tariffs, then the geopolitical concerns. A lot of the sentiment seems to indicate that these borrowers are okay with where we are today and are taking a bit more risk in building capex and building plants, equipment, et cetera. So that's helpful for the regional bank space.
All right, Herman Chan, thank you so much. No doubt we'll be speaking with you again several times this week. That's Herman Chan of Bloomberg Intelligence.